let's talk about this again. So let me pull this up again. Okay. So the secret formula that you want to watch out for, that you want to master before you trade. Don't trade until you master this, okay? What this is, and I'm gonna kind of clear. I think there's a whiteboard that I can use here. Whiteboard. Let's see. Virtual whiteboard. And I'll go through this with you guys because I really want you to kind of get this down right here. Start drawing. Okay. So the formula that you want to use, okay, is when someone says risk 1%. Let me share my screen. When someone says only risk 1% of your capital on each trade, this does not mean that you only put 1% of your capital in the trade, okay? That does not mean that. What that means is that if your stop loss triggers, the total amount of money that you're going to lose is 1% of your portfolio. So let's walk through this. So $10,000 portfolio. If you have a 1% risk, okay, then that means you're going to risk $100 on a trade. Now, what that means is that once your stop loss hits, that's how much you lose, and you lost 1%, so you're down to 9,900. Okay? So you lost 1% of your capital, and you can lose 100 trades in a row before you hit zero. Okay? Now, the formula that you want to know for every single trade you take is very, very easy and very, very simple, okay? So let's erase all this again. Let's see, let's do a really giant eraser. Okay. So the formula you want to know and that you want to master, and I'm monitoring a trade right now, so I apologize if I'm a little bit. Okay, so the formula is very, very simple. It is risk, amount, stop loss. Okay. So let's see if we can make these bigger. Risk amount. Let's see. Oh, you know, I can just zoom in. There we go. All right, cool. So risk amount divided by stop loss. Now, what does that mean? Now, if you remember what I said before, $10,000 portfolio. This isn't going that well, but it's anyway. $10,000 portfolio, okay? You want to risk 1%. So your risk amount equals $100. Stop loss equals entry minus stop loss level divided by entry. This is for longs, okay? And I'll show you how to do shorts too. All right, let's take a look at that. Let's take a look here. Okay, now what the hell do I mean by all this? You have to know this because this is very, very important. If you take this long position trade, okay, and let's say you're going to go from here, and let's say this is a swing trade. So your stop loss is 12%. That's okay, right? 12.7%. And let's say you're targeting the top of the range, 29%. That's a good trade. It's a valid trade. If you think this is a W reversal structure, you put in your stop loss below the swing low candle, and you're targeting top of the range. You're like, a lot of people think, wow, 12% stop loss, that's too much. Well, here's why your stop loss is completely irrelevant. Okay, it's not completely irrelevant, but when people say I got stopped out for 20%, you have to understand that this is the most important thing right here. Risk amount divided by stop loss is the most important thing, because what this equals is equals position size. Okay, so this is how you manage your risk, and this is how you stay a profitable trader. So we've got this trade right here. So I'm going to do this calculation with you. Even if we go to 14%, we've still got a 2-to-1 win ratio. Okay, so risk amount on a $10,000 portfolio is $100. Okay, We're going to divide that by our stop loss, which is going to be 0.14. 14%, move the decimal over twice, and that gives us $714. Okay, so risk amount equals 714, or sorry, position size equals $714. Stop loss equals 0.14, and risk amount equals $100. Portfolio equals $10,000. Okay. This is not sexy. It's not boring, but this is how you become a profitable trader, and this is how you can margin trade successfully. All right. So you take your $10,000. How much do I want to risk? 1% capital. Now, when can you risk more than 1%? Most professional traders will risk 1%, but you can risk more when you have a proven track record of a strong win-loss ratio. If you're winning at 75 to 80%, sure, you can bump your capital risk up to 2.5%, okay? But that means that if you do go on a losing streak, you're going to lose your portfolio capital very, very quickly. The key is win big, lose small here, okay? So the formula, I'm going to write it down one more time, is risk amount, stop loss equals position size, all right? Boom. All right, so this is the key. This is the key to trading. This made me go from a losing trader to a winning trader, okay? So every trade you take, figure out how much you want to risk. Just take 1% of your total portfolio balance and then divide that by your stop loss, okay? And then that'll give you your position size. So on a $10,000 portfolio, I'm going to use 7% of it, $714 on this trade. And if my trade hits my take profit target, I am going to win, okay? 714 times 0.28, I'm going to win $200, okay? But if the trade hits my stop loss at 14%, I'm going to lose $100. So it's a 2-to-1 risk reward ratio. Now, the question is, why the hell would I ever use leverage? For this trade, you can use 1x leverage, $700, right? Now, here's how you use leverage, okay? So let's say you want to do a scalp trade. And let's say that we are entering at 72.55 and our stop loss is at 72.25, so 0.41%. And let's say we're targeting to the top of the range, maybe here. Still a valid trade. The trade is a 4.78 risk reward, beautiful trade setup. Come back down to the bottom of this level. Top of the range, which was the previous demand zone, tested it a couple times, so still decently valid. We've got some bid structure. So let's say I'm going to go long here. My stop loss is 0.41% below the swing low of this candle. So now let's take our $10,000 or $100, and now we're going to divide that by 0.0041 because this is 0.4%. This would be 4%. This would be 40%. Okay. So our stop loss is 0.0041. Now we get 24,390. So let's go back to that same example that I was just talking about. Okay. So now our let's just do a clone. Okay. So now our portfolio is $10,000. Our risk amount is $100 still, but now our stop loss is 0.0041. But our position size is now, okay, so we'll do that again. 100 divided by 0.0041. Now our position size is 24,390. Well, now you're asking, well, I only have $10,000. How the hell can I get this? Now, this is why leverage is completely irrelevant to managing your risk, because the leverage is just a slider, okay? So 5x, 10x, 20x, 30x, okay? So our portfolio is $10,000. Our position size is 24,369. So then if we want to get to that level, okay, if we want to get to that $24,369, then what we need to do is we basically just need to take 24,369 divided by 5. So we basically would go 4,800 $739, or sorry, $4,873 on 5x leverage, and that gives us our 24,369. Okay. Now, if we want to go on, so 4,873. So then, if we want to go on, then we take 24,369 and we divide it by 10. 2436. 2436 times 10 equals 24369. So you can go, 5x, 10x, 25x, all those things. All of it is irrelevant unless you get to a leverage where your liquidation point is going to reach your stop loss first. Okay? So and I hope you guys are digging this. I hope you like this, because this is the secret. This is the stuff that everybody knows, and I harp on it all the time. Do not leverage trade. Do not put your funds on a leverage exchange until you know this. Until you know this, there's no point, because you're going to burn your capital. You're going to be putting 25% of your portfolio, 50%. You're going to push that little 50% button like Binance and Bybit and BitMEX. That's not what we got. We got to calculate our position size. Be calculated, okay? So 24,369 at 10x leverage. Our stop loss never changes. It's always at 0.0041. It's the same thing. So you can have a 24,369 position, and you're still only ever going to lose $100. Now, if you hit your 3%, okay, so let's zoom back into the 15-minute. If you hit your 3%, or 1.9%, okay, so we're risking 0.41%. We're looking for 1.94%. So if we, origin, don't need that. If we hit that, let's look at the daily. So if we hit our 24,369, 24,369 times 0.02, then you'll make $487 on this trade if you hit that 2% win. And so you're going to risk 100, you're going to make 487. It's a 4.8 risk reward on that trade. And that is how we manage our risk. That's the secret formula, guys. Risk amount divided by stop loss equals position size. I hope you guys understand that. I hope you guys master that. If you have any questions, leave a comment below. I'll try and answer your questions. If not, I do have a risk management guide completely free for you guys. I'll leave the link below, but I really wanted to talk on this because I see a lot of people burning their accounts, liquidating their accounts, and I don't want that to happen for you guys. So before you trade leverage, before you trade anything, master this, understand this, and then once you get this and you understand how your win-loss ratio, risk reward, and all that stuff works together, then I think you'll really, really, truly get trading. That is it for me, guys. I covered most everything. I'm going to cover traditionals tomorrow. I can take a quick peek at them real fast.